Oil surged on Thursday, gaining more than 5% as hopes arise that Russia and Saudi Arabia might end the oil price war very soon. However, overall negative sentiment in the global financial markets may wane on the crude prices. The Russian ruble is extending losses against the US dollar. The ruble becomes even more dependent on the Russia's central bank's policy. US President Donald Trump said he expected Saudi Arabia and Russia to reach a deal soon to end the oil price war. These words brought optimism to oil traders. What's more, Russian President Vladimir Putin also called for a solution that would improve the challenging situation in global oil markets. Brent crude was rapidly rising in the morning trade, almost reaching the level of $28 per barrel. West Texas Intermediate jumped above $22 a barrel. The discussion of the need to stop the price war may not be enough to push the quotes higher. Besides, market participants remain worried about other negative factors. Investors prepare for another volatile session amid the speculations around the Saudi Arabia-Russia price war. Traders are now evaluating negotiations between top energy officials of both countries. In addition, two biggest oil producers in the United States have urged the Texas regulator to limit oil output to help support the prices. Reportedly, major oil refineries in the US and Europe have refused to buy extra crude volumes from Saudi Arabia despite low prices. So oil prices are being determined by various factors, including expiration of oil futures contracts. The imbalance between supply and demand currently remains the main threat for the market. Within months, the world could run out of oil storage capacity. This may lead to another crash in crude prices. The Central Bank of Russia is doing everything possible to keep the ruble afloat. During the non-working days in Russia, the policy of selling foreign currency under the budget rule seems the most effective one. The ruble is also gaining ground on rallying oil prices. The dollar-ruble pair opened today's session with a steep drop, but later the greenback managed to win back losses. In the mid-session, the ruble was seen trading in the red near the level of 78.14. The ruble remains under pressure mainly due to the COVID-19 pandemic and restrictive measures aimed at containing the rapid spread of the virus. Today, investors will focus on the US jobless claims report for the previous week. Market participants predict another surge in the number of claims. The ruble is expected to hold in the range between 75 and 80 against the US dollar. In case of the pessimistic reports, the American currency may end up at the upper boundary of the channel by late Thursday. You were watching Market News on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.